Hi viewers, so let's start with today's analysis. I think a pretty balanced and a decent market action today. I will not say it is very bad, but it's not very good as well. And that analyze the market. Today's analysis is very important in terms of global context, Indian context, etc. I will discuss many things and try to come to conclusion what exactly should be done in the markets now. So we had a ferocious rally on Monday where we were around 900 points up, and we made a high of around 24,973. Yesterday we slipped around 340 odd points on Nifty, and today again has been a mixed bag of action on the markets. Now let's find out what suddenly has happened and why the market is now getting resistance or why it is not able to climb up despite of the good inflation numbers which came yesterday both for US and India. So inflation number for India came around 3.16%, which is lowest in last 5 years. So it has come after 2019 June or so. It is after that it's the lowest point. And so as for US, which has come at the lowest from I think 2021 June or so. So US the expectation was around 2.4% year on year inflation. It came to around 2.3%. So it beat the expectations. And it is very close to now the target band of Fed, which is around 2%. So in a way, we can say Fed has fulfilled its job. They have achieved extraordinary results out of their policy. So they were successful in doing a soft landing. Many people were thinking that they might enter into a recession, bring down the interest rate down, to bring down the inflation down. So they were successful in bringing the inflation down very close to their target just by soft landing. I think the fantastic work has been done by Fed in that way. They achieved whatever they wanted to achieve. Had this tariff war not have started, probably Fed would have been absolutely on course of achieving its 2% tariff, 2% inflation target, and they would be gradually cutting rates as well. However, with the tariff war, probably this is looking slightly distant, and Fed would like to watch for the numbers to take a decision anything forward. So I think in June policy now it's also very difficult for Fed to cut rates. I don't think that will be possible now for Fed for doing that. Moreover, yesterday I think JP Morgan has reduced the forecast for recession yesterday for US, and now the probability of recession in US is below 50%. They've also increased the forecast of GDP growth rate for China after the de-escalation of tariff war. We all know that the tariff is now reduced to 30%, and I think US is told that if China does some good steps on fentanyl drug, they will bring down the tariff to around 10%. So it is coming to a flat rate of 10% across all countries. This is what more or less US is trying to achieve, or let's say they'll be satisfied with. 10% के लिए this drama should not have been done. 10% to anyways any country would have been given to them, happily to US anyways. They should not have done this much drama that they will put very high tariffs and then they will bring people on negotiation table. Nothing happened of that sort. And in fact, it has been a absolutely boomerang kind of a strategy for US and for Trump specifically. China has shown economically they are much more ahead than the US. They have a manufacturing capacity. They have a manufacturing firepower, and nobody can overtake them. Yes, low end some assembling jobs, etc. Some packaging jobs can always be offloaded, but the core manufacturing, the heart, the brain, is always with China, and that will remain with China. They've shown that, and that actually tells us that China is going to be number one country supremacy in terms of its economic power very, very soon. Although it's still there, but I think in numbers also it will start looking far greater than America very soon. Now, why I'm telling all this? So yesterday we also got a number for inflation for India, which was very benign. It was around 3.16%. Still, the markets were nervous today, and the markets we were seeing that they're not able to proceed further. The reason is very simple. Yesterday we had a very, very ferocious selling from FIs, wherein they sold the index of around 7,500 crores. A lot of shorts were added, longs per cut, and stock futures also they sold around 7,000 crores. So in total, there's around 15,000 crores selling from FIs, which is very huge. And the way the longs have been cut and the way shorts have been added, probably now it will be difficult for the Indian markets to cross that important high of yesterday, which was 24,973. Today's high also, in fact, in spite of the good news of the inflation part, which is 3.16%, which brings us to a chance of around three rate cuts now for the balance year. This is what some economists are saying. Also, some economists are saying for two rate cuts. But I think if interest rates remains benign for US also, and the way Trump is pushing Mr. Powell, if we get one or two rate cuts in US, which I think their focus is showing in that way, then I think there will be three rate cuts in India, which will again put the economy much more in a resilient way. The numbers are so benign that if we get a surprise in terms of GDP growth for Q4 of FY25, then I think we might get a double rate cut also, and very easily we can cut 0.5 interest rate cut in one single step, because the inflation is such a relevant factor now, which has become the Indian economy and Indian markets as such. Then why are the Indian markets nervous today? So first of all, I told you that I entered into the markets on that India-Pakistan war also, but I've exited my positions today. In today's high, I have exited my positions. And I tell you why I exited, what are my reasons for doing it. I'm not saying that you should also do that, but I'll give you my reasons. So I'll just take one by one. First thing, bond yields are again touching around 4.5%. So this is something which is uncomfortable. Anything which is more than 4.2, 4.3 becomes uncomfortable, and it makes much more sense for the US investors to remain invested in the bond markets. Why should they invest their money in the equity markets? So that trade will start playing on, and we will see FI selling again coming back. But the good factor is that the dollar index is still down. Yesterday it touched around 101, but it slipped from there. Now it's around 100.2, 100.3. So dollar index is giving you comfort, the bond yield is not giving you comfort, which means that according to me, market should still remain nervous in terms of FIs selling. Now, why should they sell India? So, if you remember, we have been discussing a lot that I exited my position at 23,900 before, then re-entered the market because of the India-Pakistan war. The reason very simple: the earnings. We saw the earnings are pretty normal. We wanted to assign a higher P multiple. That is why we are looking for around 25,500 to 26,000 mark, which is still possible, still there, because the macros are extremely good for India and the micros are turning to be good. So we are seeing green shoots in terms of Nifty earnings. We saw that the Nifty earnings were expected to be around 2% down, but we're getting around 4 to 5% up for this quarter, which means there is some extra legroom created now for the markets going forward. That is why we told 25,500 to 26,000 26,000 on Nifty is really possible. It is still possible because of the green shoots and the macro which are turning for India. But the problem is that we are again on a higher end of our valuations. From here, there are chances that yes, we might have some points to gain, but there are chances of a deeper cut also. But are we expecting a much deeper cut? The answer is no. I don't think the market should slip below 23,800. 23,800 now, I think for the entire year will act as a very, very strong support, and I think it should not be breached until unless we have a very strong external global factor. From our valuations point of view and selling point of view from any of the participants, big participants, we cannot see market going down below 23,800. It's looking absolutely intact as far as the valuation is concerned. If it goes below that, it becomes undervalued, and that time it becomes a very, very important time or a precious time to enter into the markets. Now, so the problem is valuation, which is we are on the higher end of the valuations. The problem is with the US and China deal coming through. What has happened now? So, if the fentanyl issue is addressed by China, the the tariff would be reduced to 10%. Now, on the other countries also, it is around 10%, which means there is no loss to China. But the Chinese markets have not done anything for the last 3 to 5 years. So, it remains grossly undervalued. And China has shown their supremacy in terms of economic power. There is no doubt at all. Which again makes it a very preferable destination in terms of valuations. That's one part. Second part, US. US has recovered their entire yearly losses for this financial year, for this calendar year. They, of course, recovered all their losses post 9th April, which happened due to tariffs. Those are all recovered now. And the way Mr. Trump is now trying to giving tax benefits and the deals getting signed from all around the world, which means extra business from the countries, US also becomes one more preferred destination for the equity markets again. So there's a shift again towards US, which is looking conceptually well, and for China because of the extreme lower valuations. So US and China are becoming one more becoming top favorites for putting their money. Why India is not favorite? Because of our stretched valuations. The earnings have been good, but not in respect to our P multiple. See, we are still trading around 21 times of our P multiple, but the earnings growth is just nothing, 5 to 6%. You can't assign a higher P multiple to this type of earnings growth. So we want the earnings growth to be double digits around 12 to 14%, 50%, which India has been getting for last so many years. अगर हम उस पाथ पे आते हैं, then we can get a P multiple of 20, 21, 22 also. इस earnings growth के साथ हमें वो नहीं मिलेगा, which FIs will now try to analyze how much steam is still left in the markets in terms of valuations, in terms of their earnings growth or the earnings predictability. Those things are still not there with India. That is the problem, which FIs will notice. And now there is no trigger point until first week of June, where we have the RBI policy, where we might expect this time status quo. I don't think we will be getting a rate cut, at least if the GDP numbers come decent for Q4 of last financial year. So there are no triggers because there is no Fed policy meeting now, there is no MPC meeting now. Earnings have been very close to getting closed. So no other trigger point is there, which means that markets will now wait for either the next earnings season to come or the next MPC meeting to come through. Beyond that, there's nothing to be factored in. But in China and US, the way the deals are done, the way tariff war is coming to a de-escalation, those destinations have become again favorite. So, and FIs have been net buyers in this market for the last 15, 20 days. So there is high chance that they will book some profits and take that money to somewhere else. That is highly possible. I'm not saying it will happen. So if we have to trade in the market now, then now, see, one is that you start trading only when the yesterday's high gets crossed, 24,970. That's the safest bet. If you want to be still risky trader, then today's high, I think it was around 24,675 odd. That should be crossed in the intraday, then you can enter into the markets. And so we have made a, technically we have made a lower high and lower low today. Let's wait for the markets tomorrow. Tomorrow's expiry again. I don't know what will happen tomorrow. Let's see and let's wait and watch what happens, because don't forget, a lot of shorts were created during India-Pakistan war. A lot of short covering has happened on Monday, but they might still be shorts, and FIs would like to bring the market down. It gives them two benefits. One, their shorts can be covered easily, and second, they will be booking profits in the process. So they want to book profits now. That is why the longs have been cut today. Shorts have been added. I think seeing today's market scenario also, I think FIs will have a negative figure today also. So it's looking like it will again probably moving towards 24,000 once again. It is looking like that. I'm not saying it's possible, but it's looking like that. Data is showing like that. If you have to trade in the markets now, then we definitely want to close, or at least intraday, we want to breach today's high, which was 24,73, 773, or let's say yesterday's high, which is the best part, because a lot of call writing has happened on 25,000 strike. So we want the yesterday's high to also be crossed to get full confidence that the bulls are back. Up until then, the market actually becomes a sell on buys kind of a market, or at least book your profits. See, we have gained a lot, right? From 22,000, we have been gaining a lot. There is no harm in booking profits and sitting on the side and waiting for the chance. At least I have done that. Now I will only enter the market. So today's high gets crossed, I'll enter into a small quantity. But if yesterday's high is crossed, then I'll be entering into bigger quantities. This will be my approach, and I'll be happy to sit on the side, which I'm actually doing that. Reasons I have given you: bond yields are inching higher. China is again becoming very lucrative because of valuations. US is again becoming lucrative because of the deals which have been done across the globe, which will bring in much more business to them. And secondly, the Trump's tax cut which are coming into effect now, which will give the companies those kind of corporate earnings. And don't forget, the results earnings season in the US has been pretty good, much better than what India has done. Their Magnificent Seven has also done good. I have really about Apple and Tesla to a certain extent, but the other five companies have done very good, which means that those kind of businesses are still to stay. And with this kind of deals done today, also, I think Saudi Arabia has promised that they will be investing $1 trillion of money into US. So he is able to capture those deals. He's able to, arm tussle those companies, those countries, and all gains to USA. You already seen the Miller deal which is done with Ukraine. So all those things are looking positive for US as of now. I think S&P should reach 6,500 pretty soon. This is what I can assume, or let's say I can imagine. The only negative can be the tariff part, which will start coming into effect from next month onwards. But I'm still not getting worried out of it because the tariff has been more or less resolved, and they'll be getting that extra income of 10% tariff from all the countries. That we should not forget. It's around 200 crores per day. That's an extra income, which will again help them to give them tax benefits. The way the deals are done with other countries, that is also beneficial to them. India में what is working well? I think India is working well in terms of small cap, mid caps, and real stories. जहाँ पे FIIs नहीं है, those are sectors which will gain because the India has shown to the world that the kind of supremacy that we have in terms of defense. Apart from defense, some kind of metals can go forward because of the expected growth now in US and China. So IT can do well, metals can do well. Uh, Apart from that, pharma is getting stuck because of the lower price cuts which Mr. Trump is trying to create. Although it's actually positive for pharma companies in India because those branded patented drugs cost come down and generics become much more important. And more importantly, the lower prices India can offer to Mr. Trump that makes them much more affordable in US. So pharma is 50-50, but FMCG is not looking good because demand is not there. Although there's a lot of anticipation of demand, so probably there is some buying in FMCG. IT is looking good, metal is looking good. Nifty Bank is not looking good because the credit growth is not there. हमने पहले ही बात करी थी. And now FIs, if they sell, they'll actually sell into banks, and they will not sell much of IT now because US will start picking up. These are trades which will happen. Small cap, mid cap should continue to do well. At least they will have a outperformance with respect to Nifty Bank and to certain extent Nifty also. So all the good news are there in the markets now, but these all good news have to convert into earnings, which is not there, which is not visible as of now, not even the commentary and not even the results which we came for this quarter. So until those start coming in, probably markets will remain sideways. We will see some kind of profit booking. I think everybody should do it now. And probably the right time to enter now again is 23,800 to 24,000 band. I don't know will you get it or not, but it's better to sit on the sides. Those are aggressive traders. They should enter the markets after crossing today's high, double their longs if at all the market crosses yesterday's high. Similarly, if tomorrow also, if you see that you get a lower high, then short the markets. If you cross below 24,500, double the quantity of shorts. That is a short trade, and I want to do for the long trade. This is how the markets are placed as of now. I hope you would have liked the analysis. Thank you so much for watching. Thanks so much. Thank you.